Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1,822nd edition of Short-Term Trading Live with Oscar Carboni. This 1,822nd edition of these educational videos coming at you on a Monday night for Trading Tuesday, August 28th, 2018. Some topics on the board we're going to get to in just a moment. Let me remind you, if you don't know, you probably never traded even once in your entire life. But remember that futures trading is extremely risky, can cause substantial financial loss. I mean, you know how this game can play. You can lose a lot more than you think, a lot more than you've invested. So please, please never trade without stops and never trade without money you cannot afford to lose. And before we get disturbed, grab that phone and silence it, please. So, everything we do here is live. We never shoot twice. It is what it is. All right, so, green OMNI on the board, but nimble is the first word I am going to say to you. Reminder. The Oscarism known as the holiday reversal phenomenon is now upon us. During the days leading up to a 3-day holiday weekend, and I'm talking about a big one like the end of summer bash, that's what's going on now here in the United States. This is the last week to go to your summer homes, to go to your lakeshore homes, to go to the beaches before everything closes down. You got to close down your summer home. You got to pack things away. Everybody worth their salt is out there doing that this week, last week of summer. That brings with it holiday reversals because we'll have a 3-day weekend. Monday's off, right? So you get the holiday reversals leading up to that 3-day weekend. They could come at any moment. They might strike in the middle of the day tomorrow, the end of the day. It might not start till Wednesday. So nimble, nimble, nimble. But remember, holiday reversals are upon us this week. Come to my trading room. I'll explain more in detail about that. Gold, the hunt for gold is on a slight hiatus for now. As you know, back to buying gold the last couple of days, and we will look to buy more again on Tuesday. So we're not selling gold right now. I'll show you the chart. And interest rates are going up. Kids, at the next meeting, interest rates will go higher. The charts will prove that out to you. Come on down to livewithoscar.com. Make sure you join my service, the Platinum Membership Service, where I can send you my trading recommendations in real time as I'm going to get in and out of the markets. You find out about those trades at the exact moment. You get in with me, you get out with me. We live together, we die together if necessary. You know what I mean? Whatever it takes. But make sure you join my service so I can send you those signals as the market moves. With no further ado, let's go look at some charts. Okay, traders, NASDAQ daily ball looking fantastic, right? It keeps holding that green channel line and away it goes. And you know, if you're a good analyst, you start connecting the dots and you connect these two highs together and you extend that line out and you got past that too. Looking pretty good right now, right? We're past the previous highs. That would be right there. So you're above previous highs. You got above this trend line. You held down here. Looking great. Omni's green. Just remember, be nimble. If you get long and have profit, you've got to take profits quickly because the holiday reversal could come at any moment. Then there's the Russell 2000. Look at that. What more could you ask for? It broke out of this huge apex. I've been showing this pennant to you for quite some time. We broke out of that pennant, and this is some form of an Oscarism flag right there, and away we're going. So you got to like what the Russell looks like on a daily trading basis. Dow Jones Industrial Average, if you look here, we had that double top. It worked. Market came down again, came all the way down to here. Since then, through here, left a gap, and is all the way up there. So, double top negated, and away the Dow goes. Transportation Average. Now it is back above, or at least challenging once again that previous peak of what was considered a double top. Here we are right now, challenging that, so it looks like we should get above it and follow in suit with the other markets. Then you've got emini S&P, and I've been showing you this chart in video after video. Now we're above that red resistance, but there is one thing that makes me get a little bit, it's a little troublesome if you ask me, with the notion of the possibility that holiday reversals will come this week. That same chart, right? We did break out of this. But now you've got this, and this could very well put an end to the party for a couple of days. But I'm not going to count on that because I don't have that resistance in almost any other chart. So let's just look for this to move forward and go right through. And then gold is on a hiatus. Once again, temporary hiatus. Why? Well, of course, the OMNI is green, but if you recognize this channel that we seem to respect the highs and lows of this channel, every time we are now above that channel. All right, so selling goes on a temporary hiatus, no doubt. And then, as I mentioned to you, look at the bond chart. Bonds are showing us that interest rates clearly will go back up, or at least will raise once again, be risen once again in September's meeting. Left shoulder, head, right shoulder, huge head and shoulders. Market is breaking down from that head and shoulders. This will be recognized at some point as some kind of a bear flag as the market works its way in that flag and then lower at some point, because when they raise rates, if bonds are on one side and rates are on the other, as they raise rates, it makes bonds go lower. Consider this a teeter-totter, a seesaw. If it was like that, it would be balanced. But if they raise rates, rates here, bonds there, that seesaw becomes crooked. So I've shown this to you many times. That's the way it works inherently. If they raise rates, bonds go down. It works the same way. If they do not raise rates and sellers or traders sell bonds anyway, it still raises rates. So bonds going down inherently raises rates, whether the Fed says they're going up or not. Bonds are signaling lower as the future moves forward. All right, traders, so that's what I wanted to show you in the chart segment. I'll see you in just a moment. Okay, traders, you've seen the charts. You've got my technical reasoning why we've got the green OMNI on the board, but be nimble because the holiday reversal phenomenon should be upon us now. There's no guarantee that phenomenon of holiday reversals, which is a coined phrase by me, there's no guarantee it's going to come this week, but I don't know, in the last 100 holidays, it comes almost all the time. It happens to happen in the week leading up to that holiday. So you've got to say to yourself, if it's going to happen that often, you have to expect it to happen until it does not. So that's why I'm saying be nimble. It could come at any time. It could finish very quickly, too. By Thursday, Friday, we could be done with the reversals and back to work. So be careful. Be nimble. Join me at livewithoscar.com. And remember, keep your emotions out of trading. One of the best things you can do to help keep those emotions at bay, and believe me, I know it's not easy, but try this. Say this to yourselves every morning, every afternoon, every evening, and you know what that is. You ready? Stops are in. Emotions are I got you. All right, traders, I will see you all at livewithoscar.com. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.